on edible oils, including today, it's unlikely to do so as far as fuel is concerned. Now, there is a logic that the government has behind this, and to help us understand this logic, to make sense of it, we have with us Ramya, who tracks the finance ministry, tracks the economy for ThePrint. So do start sending in your questions. Now, Ramya, this is a question that really affects everybody. The prices of fuel, the taxes on fuel. You've done a story today, after your conversation with somebody very senior in the government. What is it that prevents the government from cutting taxes on fuel?
There are a few aspects to it. First of all, fuel is a major contributor to government revenues. The government collected nearly 3.4 lakh crore from excise duties levied on diesel and petrol. So it's a major source of revenue for the government in a year again where government finances are not looking very good because of the second wave and an impending third wave. We don't know if it will happen. So one is that. Second, also, it's about the government prioritizing. Right now, the government is prioritizing reducing taxes, basically reducing taxes on food items to make them cheaper. So what the government has done is it has cut import duty on palm oil. Edible oil prices have been increasing. It has cut import duty today on masoor. So that is something that the government has announced. So it's very clear that the government is making its priorities clear, that what they're looking at is probably cutting taxes on food products and not cutting taxes on fuel. And the government's justification, the CGA in an interview to us talked about on how MNREGA workers or those who avail the government's national food security, avail subsidized food grains under the national food security, they're unlikely to own four-wheelers. So they're unlikely to get really impacted by the kind of fuel rise that we are seeing now. Also, it's basically on the composition of the CPI inflation basket. So the CPI inflation has been over 6% for the last 2 months.
Right.
It was around 6.2, 6.3 in June. So that's a worry, right? Because it's more than the 2 to 6% that the RBI targets. RBI has also been asking the government for cutting taxes on fuel. But the reason why the government is not doing it is, it seems that it's because of the composition of this inflation basket. So food inflation constitutes around 50% of the CPI basket.
Right.
Whereas according to the government's calculations, fuel through direct and indirect effects contributes only around 6%. So food's composition is almost 8%, much higher than what fuel's contribution is to a household budget. So that is one of the reasons why the government has so far not tinkered with this, despite repeated calls by the Monetary Policy Committee to asking the government to do so.
Right. But Ramya, sure that CPI inflation, the contribution of food is much higher than fuel. But because CPI inflation has continued to remain a concern, after a point when the government reaches a point where it can't cut taxes on food items anymore, will it move on to fuel? Is there any chance of the government starting to cut taxes on fuel?
I don't think the government will be caught in that kind of a difficult position. It's because the government expects that the inflation will start
coming
easing
down
in the current month and in the next month. That is because right now they're attributing a major part of the inflation to the supply side constraints that have come because of the pandemic, the second wave of the pandemic. So what the government believes is, because the first wave last year, it went on for a long time, and the kind of restrictions were much more stricter across states, and which led to a lot of supply side disruptions. But this year the government feels that second wave was managed much better in terms of there was hardly an economic or supply side disruption, and they expect that this situation will normalize. So those kind of disruptions will not really see the inflation rising in July or August. So that would be one big change in how the government is thinking about this in this current term. So unlikely that the government will look at reducing fuel taxes, especially given the fact that, as I said, it's a major source of revenue right now. And the minute inflation goes down below 6%, the kind of pressure on RBI, the kind of pressure on the government kind of eases, because less than 6% is considered to be acceptable.
Right. Okay, so this question is from Arush. Has the government finally admitted it believes in pure socialism, taking from the rich and middle class and giving it to the poor? Because that's the logic when you say Narega workers don't really own four-wheelers.
Right. It's more as if the government is right now, given their financial constraints, the government is prioritizing that who will be the worst impacted by inflation. And unfortunately, the way India's population is, you still have a substantial number of people who are below the poverty line, and for whom the fact that you need edible oil at decent price, you need food grains at a decent price, you need pulses at a decent price, right? So it does, and this government, I would not say, has not taken any socialist measures per se. You have many of the government schemes, even the Kisan scheme, wherein they were giving money to farmers, PM Kisan scheme.
Right.
So again, this government has exhibited stark, some.
There is a welfareism attached to this government.
True. Yes.
Right. All right. Okay. Rajavardhan Rane, why can't the government raise taxes on corporates and the rich people and reduce taxes on petrol and diesel? So this is the other side of the story. There are richer people still.
Right. The government is unlikely to increase corporate taxes. The government has been very clear and they have been very open about the fact since the time the government cut corporate tax rates in September 2019. They believe that this is how India will become competitive compared to other Southeast Asian countries, will attract investments, will attract more companies to set up their manufacturing facilities in India. So that is a route that the government is unlikely to take. Also, the Prime Minister has been, after the whole Soot Boot Ki Sarkar slang in the first term of the Modi government, in the second term, you did see the Prime Minister openly talk about respecting wealth creators.
Right.
The need for privatization. So, he very openly said this. So,
I think that is something that has politically hit the government the most in the last 10 years or since 2014, because after that jibe, even midway through its last term, it changed stance completely and moved towards Jan Kalyan, as the Prime Minister would constantly.
But, the fact that the PM now, has made a very open statement in Parliament does kind of signal a shift in the government's approach in terms of the fact that they have announced this major policy on privatization, the fact that the government will move away from strategic sector, from non-strategic sectors, reduce its presence in strategic sectors, does kind of talk about the government's focus, the changed focus right now.
Okay, this is from Partha. When the GST income has come down, GDP reduced due to COVID, but vaccine cost liability is in lakhs of crores, what can be the other option for the government?
I don't think vaccine costs would be in lakhs of crores. The estimates would not be, even a 1 lakh crore. The estimates that we're talking about are much less than 1 lakh crore. So I don't think that argument holds here really. Yes, GST revenues have fallen, but the government does expect GST revenues to pick up, and GST revenues didn't see a very major dip. They've still remained around the 90,000, 1 lakh crore. So there's not been a very major dip in GST collections. Interestingly, the government is also expecting the corporate tax collections to pick up in the coming months, as demand picks up and as again people, real normalcy kind of returns in people's lives. Yeah.
Right. Okay, this question is from HK. Can't we bring in a certain card system that issues special tax cuts on diesels so that costs of good transportation won't be affected? To some extent, it will help inflation rates to be kept low.
True. So again, according to the government's estimates, I say around if 3% of the inflation is due to the direct fuel prices in terms of the petrol that you buy from a petrol pump. But the indirect effect is only around 3%. So that would be your transportation costs, that would be your input price pressure costs. So net, it's not still a major chunk of the inflation basket. That is the government's view, and that is one of the reasons why the government has not so far cut taxes and is unlikely to cut in the near future.
Okay, this is from Lakhan Jadhav. Is fuel the only source of government revenue?
Fuel is one source of revenue which is not dipped at all. So, it's one stable source of revenue for the government. So, and it has been for the last 1 year at a time when, corporate taxes, if you would see, there was a sharp dip in collections. There was actually a contraction. So, that's the kind of impact that it had. Whereas fuel revenues have actually grown compared to the year before. So, it is one stable source of revenue which the government would not want to part with. Again, the government, levies, besides excise, it also levies cess on fuel, which it doesn't even have to share with states. So it's if for the rest of the revenue like GST and corporate tax, some portion has to be shared with the states. That would be around 41% of the money has to be shared with the states. But when it comes to cess on petrol or diesel, that money doesn't even have to be shared with the states.
Okay, Hitesh Nautiyal. Hitesh is a member of our YouTube community now. In fact, like Hitesh, you can also become a member of our YouTube community All you need to do is pay a little bit, which is 159 rupees a month, and there are special perks, special benefits waiting for you once you become a member. So Hitesh's question is that in one of your articles, Ramya, you do talk about the fuel price cuts before state elections. So we will have to wait till early next year when the government, for the government to cut taxes, because there is UP elections next year, there's Punjab, there's Uttarakhand.
Right. That article mainly talked about how there were no increases. I didn't really talk about price cuts, but it talked about how there were no increases in the, I think it was in the March to May period. That was when the elections were happening. March to April period, in fact, because I think 2nd May were the results, right? So that talked about basically on how there were no price increases during that period, and then there was this flurry of increases the minute the elections were over. So definitely a pause may be expected ahead of UP elections. UP is a very important state politically for this government. So it is possible that there is a pause before the elections, and again oil marketing companies start increasing rates to match them with the market prices and to recoup their losses.
Right. Okay, another YouTube member of the print community has a question. Moreshwar Pedadi, what impact will it make if the Iran sanctions are uplifted to India's GDP in spite of being the only country to trade oil in INR? And can we see a sharp decline post US Iran talks?
It will all depend on how the oil prices move. Obviously, if the sanctions on Iran are lifted, there would be a deluge of oil in the international markets. You could see, because of the higher supply, the prices dipping. So it is a positive news for India, because as you know, we import a majority of oil. We are not really an oil surplus nation, we are an oil importer. So it does really help. Yeah.
Right. Okay, Lakhan Jadhav, by when can we expect fuel to be included in GST?
Unlikely anytime soon. So as when GST was agreed upon between the center and the states, it was decided to not constitutionally exclude petroleum products, but it was at the same time not included in GST. So that meant that as and when the GST Council decides, fuel could be included inside GST, but without the need for a constitutional change, which would require 2/3 of majority in both houses of parliament. So that was done with the understanding that in 2 years a review would be taken. Unfortunately, states don't seem to agree for any this move, and it's unlikely they will agree anytime soon. That's because relationships between many states and the center have not been really great. States have consistently, states feel that their dependence on the central government has increased, their autonomy has reduced. Fuel, what the VAT that they levy on fuel is the only tax per se right now, which is under their ambit, and which they may not really want to lose their autonomy over fuel right now, at a time when, as it is, even state revenues are under pressure. Most of the states have seen a dip in their revenues last year. So state finances are under pressure, and at this kind of a time, and given the kind of friction that we saw in the GST Council last year over the sharing of revenues, the fact that states were not given the compensation as center promised, that's what states claim. So unlikely that will happen anytime soon.
So it's a constitutional amendment that is needed?
Now a constitutional amendment is not needed, because it just depends on the GST Council agreeing to it. But that means all states have to be on board.
Which is a very tough task.
Yes.
All right. Okay, Hitesh Nautiyal has another question. Do you think the government will be able to disinvest PPCL this year? So where are we on the disinvestment target?
The government was hopeful that it will happen in the first half of the fiscal. It looks as if it may not happen by September, but the government is confident that it will happen this fiscal.
Right. So Ramya, you also interviewed the Chief Economic Advisor, Mr. Subramanian. In fact, you can log on to our website, theprint.in, to read Ramya's interview, and also our YouTube channel to watch the full interview. So can you tell us some highlights from that?
So it was basically an interview around the reform process. As we know, we've also done a series on the 1991 reforms. It's 3 decades since those historic reforms were conducted. So it was basically him talking about the reforms done by the Modi government and their potential impact. He also talked about economic recovery. So this is a government which is very confident of how economic recovery will progress. This year, obviously, because of the base effect, growth is going to be double digits or possibly just a bit lesser, but still it's going to be a very good growth rates that we will see this year. But about next year, he was very hopeful that with the government's capital expenditure push, with the government's efforts to front load capital expenditure with the various reforms that the government has done in terms of mining sector reforms, labor reforms, all of these measures will boost investment, and he expects India's GDP to grow at 6.5 to 7% from next fiscal and higher beyond that. So That's one takeaway. On inflation, the CA is hopeful that inflation will fall to less than 6% in July or August, and he doesn't think that will be a big worry in the coming months. So those were the main highlights in terms of where he sees the growth, inflation outlook.
Right. All right. So your dal and oil is becoming cheaper, but don't expect fuel to become edible oil. I meant before anybody thinks it's the other oil, but don't expect fuel to become cheaper anytime soon. As Ramya pointed out, the government is prioritizing where and how to cut inflation. Thank you, Ramya, for helping us make sense of this complex economic situation. A big thank you to our viewers for sending in their questions. As I said, please do become members of our YouTube community. There is a link given in the description box below through which you can become members. We have many benefits and perks specially for you.